Welcome to the deep dive. We're all about cutting through the noise, getting you straight to the insights from your sources.
That's right.
And today, we're tackling a real heavyweight, ExxonMobil.
A giant.
Okay, so let's unpack this. Our whole mission here is to go, beyond the headlines.
Get into the substance.
Exactly. Extract those crucial nuggets from the material you've given us. Looking at everything from its incredible origins right through to future potential.
Quite a journey.
It really is. As we dug into your sources, one thing that just jumped out was this relentless focus on market dominance. Scale.
Always skill.
Right from the start. You trace it back to Rockefeller's Standard Oil, 1870.
The original behemoth.
And you see that same drive, even through the massive 1911 breakup, the Supreme Court splitting it up.
Into 33 different companies, including what would become Exxon and Mobil.
And then, incredibly, they come back together in 1999.
Reconsolidating. Forming the ExxonMobil we know now. Still chasing that scale.
Absolutely. And that history really seems to define their business today, doesn't it?
It does. You see it in their integrated model. You've got the core upstream that's exploration, production.
Like the Permian Basin and Guyana.
Exactly. Huge assets, big growth areas. Then there's product solutions refining, chemicals, and crucially, this newer segment, low carbon solutions.
Right. That's interesting. They're putting serious money there.
Up to $30 billion by 2030, the sources say. Areas like carbon capture, hydrogen.
And even lithium. That was a bit of a surprise.
For EV batteries, yeah. It feels like a pragmatic diversification. Hedging bets, perhaps.
Pragmatic. And speaking of big shifts, the financials are pretty dramatic, too.
Oh, yeah. Quite the roller coaster.
Your sources show that huge swing, right? From a net loss in 2020.
Their first in decades, wasn't it?
Yeah. To record earnings in 2022. $55.7 billion.
Massive numbers.
But here's something really fascinating, maybe unexpected. That engine number one story.
Ah, yes, the activist hedge fund.
Tiny, like 0.02% stake. And in 2021, they actually got 3 directors onto ExxonMobil's board.
Over climate concerns, primarily. It was quite the shock.
It really reset the game for shareholder activism, didn't it? Especially on ESG issues.
Definitely showed that even small players can have a huge impact. It highlights those external pressures.
True. But you can't really understand the company without looking at the controversies, too.
No, you have to weigh the history. The Exxon Valdez spill in '89, for example.
Devastating. Environmentally, economically.
And the shadow of that lingers. Plus, the ongoing Exxon new allegations about climate change knowledge.
Right, which sort of leads to the question, how does a company like this stack up against, say, classic financial principles?
That's why we looked at it through a value investing lens.
Yeah.
Like Benjamin Graham's framework.
Okay, so pulling it all together, what does this mean for you, our listener? We've seen this company shaped by scale, navigating massive changes.
Its financial performance, well, it's strong. Look at the dividends. 42 straight years of increases. That shows resilience.
Incredible resilience in a tough industry. But there are definitely long-term headwinds. Big ones.
Yeah, this deep dive shows they are investing heavily in those high-return areas. Permian, Guyana. Doubling Permian output by 2030 is the goal.
Ambitious.
And making those, let's call them pragmatic, moves into lower emission tech, like that huge hydrogen facility in Texas.
But the past casts a long shadow. Valdez, climate litigation, those are real risks. Reputational, legal.
Absolutely.
And maybe the most intriguing bit we found for you was applying that Graham valuation model.
The classic value investing approach.
Simplified, of course, but looking at earnings, growth potential, bond yields, it gave an intrinsic value around $40.09 per share.
Which is quite different from where it's trading now.
Starkly different, around $111.73 lately. So by that classic measure, it seems, overvalued.
Which makes you remember Graham's own warnings about forecasting the future, doesn't it?
It really does. It brings up a huge question.
Which,
in a world pushing hard for an energy transition, how does a giant built on a century of oil and gas keep creating value?
How does it balance shareholder returns with all these societal and environmental pressures?
Yeah.
Adapting.
Yeah. How does it adapt?
A tough balancing act.
Definitely something to mull over as you continue your own deep dives.